Board number 1 is the FXD1 stroke 2023 stroke 10. And I have said time and again that from the title of the bond, you should be able to get some information even before getting to dive so deep into the bond. We majorly have two types of bond that are issued by the government. We have some bonds that are subject to tax and others that are not subject to tax. And this bond is subject to tax because we know that majority of people always wait to get to invest in IFBs, which are infrastructure bonds that are not subject to income to withholding tax. But this one, FXD1, it's clear that it is a bond that is subject to tax, and what it means is that the interest that you get to earn from the bond is subject to withholding tax. Then stroke 2023, it means that the bond was issued in 2023, and stroke 10 means that it was to run for about 10 years. But of course, from 2023 now we are in 2024. Of course, sometimes has lapsed. So I think right now the tenor of the bond is around 8.3 years, if I'm not wrong. So right now the tenor of the bond is around 8.3 years. Then to the next feature is that the bond pays a coupon of 14.1510%. That is 14.15% per annum. That is the coupon rate. Then there is the period of sale. That is the period for which the bidding process will be opened. So the bond was floated on the 25th of October. That is last Friday, if I'm not wrong. That is 25th October 2024. And the bidding process will be open until 6th November 2024. So there is a period of I think 2 weeks for the bidding process to take place. Then there is what we call the value date. After the bidding process is done, bid results are announced, and now there is that day that those transactions are effected, so that you can now say that you are an investor in that particular bond. That is the time by which you should have sent your money to Central Bank of Kenya. And for this particular bond, the value date is 11th of November. You see that the bidding closes on the 6th of November, and the value date is 11th of November. So if you get to check your calendar, you can see that bidding closes on 6th. So most probably the results will be released either on that 6th evening or in the course of 7th of November, which is on a Thursday now. So you have the Thursday, you have the Friday, and you have Monday until 2 p.m. to submit your money to the Central Bank of Kenya. So that the difference between the 6th, when the bids are closing, and 11th, when the transactions are effected, it is time for you to get the results of the bidding process and get the payment key which are necessary when making transaction to Central Bank of Kenya, and giving you time to send your money to Central Bank of Kenya. The minimum amount that you can invest in this bond is 50,000, and we say that the minimum set amount is 50,000. Then any other amount should be a multiple of 50,000. Like you cannot invest 60,000 in a bond. So it's either 50,000, 100,000, 150,000, 200,000, up to whatever amount. Then there is coupon payment. We have always said that the interest or coupon of a bond is paid twice in a year. That is the total interest that you are supposed to receive in a particular year. It is split into two. So for this particular bond, interest will be paid in Feb and August. So every February and every August, that is when this particular bond will be paying coupon. And the other thing that it is good to mention, that whenever we talk about reopened bonds, there are two prices that you will always hear, you will always hear people mention. That is the clean price and the dirty price. I have explained this before in a big way, but maybe you are hearing this too for the first time. The dirty price and the clean price. What is the difference between the two? What you get to understand is that this bond is not a new bond. It is a bond that is already in the market, meaning that right now someone else is holding that bond. And we have said that, like this particular bond, the bond pays interest on the month of February and the month of August. So you get to purchase the bond in November. So we have said that interest is paid twice a year, but you will purchase the bond in November, and you will receive your first interest in February. So what it means that we will have the month of November, December, and January. You are supposed to receive your interest after 6 months, but for this particular bond, because it is a reopening, you will receive your first interest after 3 months. Meaning there is an interest between now. The last interest for this particular bond was paid in August. So there's the interest that bond has accrued between August and November. You will be paid that interest, but that interest belongs to someone else. Simply, you are not the person that have been holding the bond for these 3 months. So you are not entitled to that interest, but rather it belongs to someone else. But you are the person who will get to be paid that interest come February. So what gets to happen is that you have to pay that interest as you purchase the bond. That's why we have a clean price. That is the price. You can see it is the price of that bond. Then you add the accrued interest, which is interest that belongs to someone else, but you will be paid, so you have to pay them now. So when you take the clean price, you add the accrued interest. That is where we get the dirty price. So this bond have a clean price of 99.9395, and it has an accrued interest of 3.5378, and that brings us to a dirty price of 103.4773. So to bring this into perspective, when we say that the dirty price will be around 103.4773, it means that a unit of this bond will be going at 103.4773. So, and I like to use the example of an individual who is investing 100,000. So when you decide to buy bonds worth 11,000, when you decide to buy bonds worth 100,000, and we have said that the clean price is 103.4773. 100,000 will buy you 1,000 units. So, and each unit will now be going for 103. So it means you will have to pay. You will not pay 100,000. You will pay 103,477, because the dirty price is at 103.477. So you will pay 103,477 shillings. I hope you get the concept. But your principal, when it comes to calculating the interest, will remain to be 100,000. Now, we can do an example of the interest that you get to earn. I will still use the example of 100,000. So the coupon is at 14.1510%. So if you do your maths, 14% of 100,000 per annum, that is 14,151. But remember, this bond is subject to tax. It is subject to 10% withholding tax. So the interest of 14,000, we get to subject that to withholding tax of 10%, and we get a net interest of around 12,735. That is the interest that you get to receive from 100,000 for 1 year. But that interest will be split into 2 installments. So when you get to divide 12,735 divide by 2, you get that the interest per installment will be 6367.95. So in the month of February, you will receive 6367.95. In the month of August, you receive 6367.95. In the month of February the other year, you get 6367.95, like that until the board gets to mature. Yes, that is all for the, I think that is all that you need to know for the first bond.